So today I'm going to take another topic. The topic is related to the topic which I have discussed in the last video. So in the last video, we have discussed about what is a revenue and capital nature of transaction. So in this video, we will try to understand how those concepts, that is concept of capital nature of transaction and revenue nature of transactions, are applied while preparing the income and expenditure account. So let us understand why, first of all, let us understand why there is a need to divide the transactions into two parts, that is revenue nature and capital nature. So you must be aware that an organization, while maintaining its accounts, they generally prepare a financial statement at the end of the accounting period. So while preparing the financial statement, at the time of recording or at the time of summarizing the whole transactions, so we generally prepare the trading account, profit and loss account, and balance sheet. So this is the time where we are required to categorize the transaction into revenue nature and capital nature. So the first point you can see here is the classification is needed to prepare the financial statement. It is the classification of transaction into revenue and capital nature is needed while we are preparing the income and while we are preparing the financial statement. So, so after we have categorized, suppose we have categorized the transaction into revenue and capital nature. So what is our formula? What is the method here? The first thing is that after having the revenue items, we will take it either to trading or profit and loss account, and capital items are taken to balance sheet. So this is the basic reason why we are required to categorize the transactions into revenue and capital nature. Because after categorizing the transactions and when we are preparing the financial statement, we are required to take only the revenue nature of transactions into trading and profit and loss account. And those transactions which we considered as capital nature will be taken to balance sheet. So this is a general concept regarding revenue and capital items. But as far as our chapter is concerned, our chapter is related to not-for-profit organization. So in this chapter, how these concepts are going to be utilized or used. So after we have considered the items into revenue nature, what we will do, the nature of items will be taken to income and expenditure account, and the capital items will be taken to balance sheet. So this is the basic reason why we need to have an understanding of capital and revenue nature of transaction. Because if a student is not able to categorize between the revenue and capital nature of transaction, then it will be very difficult for him to prepare income and expenditure account. Because in income and expenditure account, we take only revenue nature of transactions, and the rest, whatever we left, will be considered as capital nature of transaction, and that will be taken to balance sheet. So this is from the perspective of income and expenditure account. So now, for your ready reference, what we can do here, I have prepared, or I have prepared a list, so that it will become easier for you to understand what are those items which will generally be taken to income and expenditure account. So these are the following items. The following are the items which are generally considered as revenue receipt. So revenue receipt will be taken to income and expenditure account. So these are the items, you can just read one by one. So these are the items which will be generally considered as revenue receipt, and they will be definitely taken to income and expenditure account and will be considered as an income. And these are the items which are, of course, it is these are receipts for the organization, but these receipts will not be taken to income and expenditure account, because these are generally considered as capital receipt. So only these receipts will be considered to be an income, that is to be an income, and therefore they will be taken to income and expenditure account. So again, now we can move on to payments, the various kinds of payment. So for your ready reference, I have listed some important payments that you can consider here, and it will make the topic very easier, so that you, while preparing the income and expenditure account, you are not uh, you are very clear about what are those items which we should record in income and expenditure account. So these are the transactions. So this is capital nature of transaction. So sorry, revenue is nature of payments. So these are the general payments which we consider as revenue nature of payments, and of course they will be taken to income and expenditure account. So you can read one by one. So these are the general payments which are taken to income and expenditure account. And in the below you can see these are also a payment, but these payments are considered as capital payments. So these payments, suppose book purchased, fixed asset purchased, so these are also a payment for the organization, but these payments are considered as capital payments, and therefore these payments will not be recorded in income and expenditure account. So it is a very short video on a summary of what items are to be recorded in income and expenditure account and what items we should exclude while preparing the income and expenditure account.